Hello, fellow investors. Today I'm going to discuss Activision Blizzard and how the company was affected after its recent Q3 earnings release. So, as you probably know, the stock price has fallen by 15% after the release, and from this year high, the company has been 35% down. But this is not something very strange for Activision Blizzard. We see regularly that this company is taking 20% drop in share prices, and in 2019 we could see a drop of about 50%. It was 48% to be exact. So what has happened in this release, in this Q3 earnings release, that the company was beaten so badly? So they are delaying launch of two new games, Overwatch 2 and Diablo 4, that was set for the next year. They are moving it from 2022 to 2023. And on top of that, they have the sexual harassment problems, which is leading the company to firing people. So 20 individuals have left the company in recent months. And this is really bad because some people from the top management are leaving. And while those games, the Overwatch 2 and Diablo 4, are already being in development, when people from top management are leaving, those people are responsible for setting the course of action. They are just setting the goals where the company, where the game should be, how the game should be developed. And something similar has happened during the Diablo 3 development, not exactly connected to sexual harassment, but the top management also was leaving, was dropping the company before the release. And as you probably know, the Diablo 3, after it was released, it was not very enjoyable game. It took Blizzard 3 years to make to patch the game and make it enjoyable for players. So this is really dangerous for performance of those games after release. But let's take a deeper look into their third quarter financial results, and those were actually quite good. So the company was forecasting 64 cents in GAAP earnings, and actually it delivered 82 cents per share in GAAP earnings in Q3, as well as 75 cents in non-GAAP earnings, and it has delivered 89 cents per share in non-GAAP earnings. So the results are much better than what they have been expected, as well as net bookings, which is really important operating metric. It's kind of similar to sales, but it includes all sales that are made by the company, including some items that are not yet delivered to the players. And the company was expecting 1.85 billion in net bookings for the Q3 21, and it actually delivered 1.88. So the financial results were really good. On top of that, they have really good financial situation. They have net debt of minus $6.4 billion, and negative net debt means that the company, after paying all of their financial obligations, is still going to have around 6.4 billion in cash and equivalents. So this is really good and safe position to be. To make a comparison, the company is currently, market capitalization of this company is around $52 billion. So we have more than 10% in negative net debt, which is really awesome. Operating cash flow, they have generated $520 million in operating cash flow, which compares to $200 million in year earlier, and their free cash flow was around 3 times bigger than operating cash flow from Q3 2020. So those numbers are really good, and they are exactly stellar, to be honest. So they have, or Activision Blizzard is reporting in 3 segments. First of which is Activision. This is the most important segment for the company. but I will discuss this later. And Activision is mainly responsible for Call of Duty. So recently, in last Friday, exactly on November 5th, we have the release of Call of Duty Vanguard, and the company is expecting to release the addition, the update for Call of Duty Warzone, the Call of Duty Warzone Pacific that is supposed to be launched on December 2nd. So those are two very important releases that we should monitor closely to check how they are going to perform, because as I mentioned before, Activision is the most important segment of this company. Of course, the second segment is Blizzard. It delivered some good results, 20% increase in sales year over year, mostly because of Diablo 2 Resurrected that has been released recently. And the other good news is coming from World of Warcraft, where we didn't see the drop of active users, which is kind of good because World of Warcraft has made this track record of losing players. However, there is one important note to make. Blizzard was selling subscription for more than 1 month recently in World of Warcraft, so to check the actual number of players, we would probably have to wait a month or two to see how World of Warcraft is really being impacted recently. The third segment is King. It's responsible for Candy Crush and Farm Heroes, and this is the segment that is mostly known of mobile games. It has also delivered quite good results. Revenue or sales has grown 22% year over year, so this is really nice. So let's go back to Diablo 2 Resurrected. I'm recording this material from Europe, so I have the game priced in euros, and we are going to pay around 40 euros per game. In United States, it's going to be priced at around $40. This is going to be important in later part of this video when I'm going to try to forecast how the delay of Diablo 4 and Overwatch 2 will affect the company. So $40, 40 euros per Diablo 2 Resurrected. Let's take a look about sales. So sales from 2019 are growing. This is trailing 12-month sales, so they are growing, and they are mostly, the growth is mostly driven by Activision. In blue, you can see how the Activision segment is performing. Last 2 quarters, Activision sales are falling. So as I mentioned before, we have to monitor closely what's happening with the new Code of War releases, the Vanguard and Warzone Pacific, because this is going to be impactful on sales for Activision. The 2 other segments are not as big as Activision, and the Blizzard segment is responsible for smallest part of sales, and King is a little bit more important for Activision than Blizzard. Same situation we have in operating profits. So operating profit is growing till Q1 2021, and currently it's a little bit down from the heights from Q1. And of course, it's because of falling operating profit from Activision. We are waiting for Vanguard and Warzone Pacific to fire off to see growth here. This is going to be most important for the company, most important releases for the company in this year. So as you can see, Diablo and Blizzard, sorry, not Diablo, but Blizzard is not delivering a really good results. It's much lower than it used to be in 2020, and despite the fact that it's growing from Q3 2019, and King is growing quite steadily. So let's check how sales were changing. The most important driver of the changes was Activision segment. So Activision was growing at around 30-something% in Q2 2020, and it was followed by 20+ sales growth in Q3 2020. So as you can see, the most important and the most impactful segment is actually Activision, and in last 2 quarters we are seeing that the sales from Activision are falling. So also the entire company sales are affected by that. And of course, Blizzard segment is reporting worst dynamics of all those segments as well. Recently, we don't have any good performance from Blizzard, which is marked here in orange. Same situation in operating profit. So operating profit is growing mostly because of how Activision is performing. Now, if we check how important Activision is, we can see the sales marked in blue and operating income in orange. So Activision is responsible for around 40 something percent of sales and around 40 to 50% of operating income. Another very important metric, net bookings. So as you can see, and as we could expect, in 2020, net bookings is growing quite fast. And recent 2 quarters, we have almost flat net bookings. They are not changing much, which is kind of good actually after the COVID year, when people were not able to move away from home and they were staying at home to seeking some entertainment. Of course, those sales had to grow. The gaming company were really having the golden era for them, and keeping the same level is not bad, to be honest. If the company is able to maintain the same level as in 2020, it's quite an achievement. It's not a bad thing. So now let's try to compare how net bookings were compared in 2021 compared to 2020. 2021 marked in blue and 2020 in orange. So Q1 was a little bit better for 2021, Q2 a little bit more net bookings from 2020, Q3 much better for 2021, and the forecast, this is the forecast, my forecast, I think that in Q4 of this year, Blizzard will report a little bit smaller net booking than in Q4 2020, but in total in 2021 compared to 2020, we will see a little bit better, a little bit more net bookings in 2021. So assumptions and a little bit of modeling how the delaying of those 2 games is going to affect the company. So I assume that Overwatch 2 is going to have exactly same sales as Overwatch 1 in 2016. And Overwatch, the first Overwatch, generated sales of $444 million. Now Diablo 4, as I showed you before, the Diablo 2 Ressurected is priced for around $40. So I assume that the Diablo 4 price is going to be the same. And Diablo 3 have seen 10 million copies sold after the first year after release. So I'm assuming that Diablo 4 is going to have same 10 million copies sold. So it's going to generate, or it's supposed to generate, around 400 million sales. So total, those 2 games should be able to generate around $850 million of sales. Now, sales is one thing, but let's try to think about how those sales are going to affect the Blizzard's operating income, or the company operating income. And to calculate that, I just checked how was the operating margin of Blizzard segment, because those 2 games are of course delivered by Blizzard. So Blizzard in its best quarters, in quarters after major releases, the operating margin of this segment was 45%, and of course it was dropping later on. So because we are trying to calculate the worst case scenario, we will use the higher margin of 45%. In that case, operating income of the company should be impacted of around $381 million. But very, very important thing, it is going to be delayed. It's not a loss for the company. This money is not lost. This company is able to, or will be able to, earn that money, but later on. So the impact on operating income is going to be visible in 2022, but it will materialize, or it will be, those money will be earned probably in 2023. So comparing this $381 million to operating income of Activision Blizzard for last 12 months or trailing 12 months of $3.5 billion, we have the impact of negative 10.81%. So probably next year's operating income will be 10.8% smaller than it could be if those games were not delayed. So let's check how what analysts are seeing for this company, so what they are forecasting. So previously, before the Q3 release, analysts were expecting that Blizzard is going to earn $4.29 per share, and now after Q3 release, they are expecting that Blizzard is going to earn $3.89. The difference is 8.7%, so the new forecast is 8.7% lower than what the company than the previous one. So my forecast was 10.8% smaller profits. The analysts are calling for 8.7%. In this situation, it's quite visible that judging only by the delay of those two games, the market has overreacted, and probably it's not justified to, the drop of 15% is not justified, especially that those money are not lost. The company will probably earn that money. It will just earn it later. Thank you for being here with me, and see you on the next material.